All right. Welcome everyone. Welcome to today's CDI session on safe protecting yourself. My name is Roberto de la Peña Cervantes. I am the program coordinator here at Financial Beginnings. So I won't be delivering the class today. We're very lucky to have Monique Thomas from Allstate who's going to be delivering the class. But before I welcome her, sorry, I just want to first of all thank you all for joining today's session. Um, we're partnering with Women's Council, with Monique and Allstate, and Columbia Bank to deliver these classes. And yeah, we're very grateful for our partnerships and for your participation. There will be more classes in the series. If you haven't already seen the flyers about those classes, I'll send some information in the chat. And also, if you'd like to bring any of these types of programs to your communities, I'm also going to drop my email in the chat so that you can reach out to me and we can see if we can arrange something like that. I won't take up too much time. That's it. I'll leave that information in the chat throughout the presentation. If you have questions, just add them in the chat, and Monique will answer them, or I'll make her aware that there's questions whenever the time is right. And I hope you enjoy the session. I'll pass it over.
And Roberto, before
Yes,
you introduce Monique,
of
this
course.
is Linnell Bevels with Columbia Bank, also the president of Women's Council of Associated Real Property Brokers. And we want to welcome everyone also to the platform. It's a fantastic opportunity to learn a little bit about things that fall under the financial literacy umbrella, including things like insurance. So we're super excited to partner with Financial Beginnings in collaboration with um, the Women's Council of Associated Real Property Brokers. And I'll also drop some information in the chat for folks if they have questions, but I'll let you go ahead and introduce Miss Monique. Thank you.
No, thank you. Thank you so much, Linnell. Thanks for adding that. Without further ado, Miss Monique Thomas, thank you.
Hello, everybody. Good afternoon. I know cameras are off because people will probably have lunch, and that's okay. All right, I'm going to share my screen. Get started.
And while Miss Monique is sharing her screen, I'm just going to say, this is Linnell Bevels again with Columbia Bank. I just want to thank Miss Monique again for her time, her talents, and her treasures. She's a wonderful insurance advocate and insurance professional located in my neighborhood of Oakland, California, specifically in the Montclair Village. And we're just super excited to have her. She's one of Allstate's shining stars, and we're just glad to have her here. Thank you so much.
Thank you. And you're all seeing my screen?
Yes, we can see it.
Okay, fantastic. Okay, so this is the the protecting yourself segment of the SAFE training. And what we're going to talk about today is protecting against fraud and protecting against loss. Go forward slides. Okay, there we go. So I'd like to introduce myself. My name is Monique Thomas, and I am the owner of Allstate Insurance, located in Montclair Village. As Linnell said, we're on Mountain Boulevard. We are the top producing Allstate insurance agency in the city of Oakland. We are the lead agency. And I've been in the insurance industry for about 20 years. I specialize in providing home insurance in high fire zones, which is why I'm in Rundell's neighborhood. But I'm going to talk to you today about how to protect yourself, even if you're not in a high fire zone, and other types of insurance that are important to you, as well as just general financial safety when it comes to dealing with your banks, your banking, and your credit cards. And our session today is sponsored by the Women's Council of NAREB and Columbia Bank. Just a little note here, that this series of virtual sessions is made possible by our partnership with them, actually. And a special shout out to Miss Karen Allen, who's also here with us, and of course with Linnell for Linnell Bevells for the opportunity to bring these classes to the communities through the Financial Beginnings footprint. The mission of the Women's Council of ARPB, or Associated Real Property Brokers, is to elevate the standards of women in the real estate industry by encouraging leadership, education, and the exchange of information through group learning techniques, and to provide an opportunity for women to increase their knowledge and expertise in all facets of real estate. Membership in the Women's Council allows its members to enjoy being on the cutting edge, advocating for fair housing, economic equality, educational training, and social dignity. Members are encouraged to become premier leaders in their communities with the reassurance that collective voices can achieve greater accomplishments, splendor, recognition, and unmatched results. This series was also made possible with support from Columbia Bank and their community lending team, which is committed to lending equitably throughout the bank's footprint, ensuring credit is flowing to underserved borrowers in neighborhoods. Their team is tasked with the sub-goals for mortgage and small business lending to borrowers with low or moderate incomes, as well as Black, Latino, Native American, and Asian borrowers in neighborhoods. On behalf of myself and Financial Beginnings, I'm so grateful to our growing partnership and for the opportunity to bring these vital sessions to our communities. So now our learning objectives for today are: 1, to explore various methods to protect against identity theft, including prevention and recovery; and 2, to review different types of insurance and learn how they protect against financial loss. So you might choose, so we're going to start with protecting against fraud. What are some signs? And this is where we're interactive here. What are some signs that might indicate that you're a victim of identity theft or financial fraud? Think about both obvious and subtle indications. And you're welcome to raise your hand. You're welcome to come off mute and share. What are some signs that you might be a victim of identity theft or financial fraud?
Actually, last year when I was doing my taxes, I got something that my daughter's social security number had been used already.
Ooh,
I haven't figured that out.
interesting. I've seen that before, but that's another conversation. Okay, and how can you proactively protect your personal information from being stolen or misused? What are some strategies or habits that you think could be effective? Anyone?
I can share.
Thank you. Please go ahead.
If I'm answering a phone call and they're asking of information, I will not share it. It's usually when I'm expecting a call or recognize who is asking the information.
That's excellent. Very good. Thank you. And so let's take a little poll here. You can use the hand reaction to vote here. Which type of financial fraud do you think is most prevalent today? Raise your hand if you think it's credit card fraud. No takers. Okay. Raise your hand if you think it's identity theft. Okay. Got a few hands on that one. Well, the answer is identity theft. It is the most commonly reported type of financial fraud, and it encompasses various methods through which individuals' personal information is stolen and used for fraudulent purposes. So I'll share something personal that I think kind of ties into that. So something I always tell my kids, and we can be guilty of this too as parents, when they're making purchases, even when you're just purchasing an app on your mobile phone and you put in a credit card number, if you're buying gas, and of course, any type of online purchase, I always caution them against using their ATM card. Don't ever use your ATM card because if there is fraud and they get your money, you're going to have a hard time getting that back. Whereas if you use a credit card, they have not tapped into your most precious resource, which is your money. You're not going to have to fight to get that back. You'll just be fighting fraudulent credit card charges. And credit card companies are usually much more lenient. Not lenient, probably isn't the right word, but they're more cooperative with you. Linnell, I saw, were you clapping for that? Or were you saying that you had a
No, I was clapping, like agreeing,
Yeah.
like, yeah.
Yeah, thank you. You're right. I that's something I always tell my kids is don't ever, and my mom always don't ever use your ATM card for anything. Always use a credit card. And if you're new to the credit journey, even a secured credit card will work. But don't use your ATM card. It's not worth it. Okay, so let's talk about financial fraud. What is it? Financial fraud occurs when someone lies or they deceive others to gain money or other benefits illegally. It involves cheating or giving false information in financial transactions to steal money, property, or sensitive details. And that comes with the mom's daughter there who had the Social Security number stolen. People steal Social Security numbers and do all kinds of things with them. So there are different ways financial fraud can happen. One is credit card fraud, using someone else's credit card without permission to make purchases or to take out cash. Investment fraud. This is misleading people into putting money into fake or risky investments with promises of high returns. A common example is a Ponzi scheme. Loan fraud. Lying on loan applications, such as providing false information about income or employment, or taking out loans in someone else's name. This is where using someone else's Social Security number would come into play. Check fraud. Writing or changing checks to steal money from someone else's account. Tax fraud. Giving false information on tax forms to pay less tax or to get a bigger refund. Identity theft. Stealing and using someone else's personal details like Social Security numbers or credit card information to commit fraud. This can involve opening new accounts, making unauthorized purchases, or getting loans in the victim's name. And I'll add a little tidbit here. This can also be used sometimes in employment situations. Sometimes people will use someone else's Social Security number when they get hired. And unfortunately, you may not find out about it until you go to file your taxes or until you get contacted by the IRS because they say that you owe taxes for a job that you know nothing about. And then finally, excuse me, retirement fraud. Illegally accessing or mismanaging retirement savings through methods like phishing for personal information, fraudulent investment schemes promising high returns, pension theft, identity theft, or using unregistered financial advisors to exploit retirement funds. So common ways to access the information needed to carry out fraud include dumpster diving, going through others' trash, looking for bills or other paper with personal information on it. Skimming. This is stealing credit or debit card numbers by using a special storage device that reads and saves personal information acquired during a legitimate transaction. So what that's like is when you go to the gas station and you tap your card or you insert your card and there's a fake device in there that's capturing your credit or your debit card information. That's happened to me. Phishing, pretending to be a financial institution or company and sending spam, pop-up messages, or even calling you to trick you into revealing personal information. Changing your address, diverting billing statements to another location by completing a change of address form. Stealing wallets and purses, mail, including bank and credit card statements, pre-approved credit offers, new checks, or tax information. Thieves also steal personnel records or bribe employees who have access to them. Pretexting, using false pretenses to obtain your personal information from financial institutions, telephone companies, or other sources. So in today's digital age, protecting yourself from identity theft and financial fraud is more important than ever. There are several proactive steps you can take to keep your personal and financial information safe. First, always shred any financial documents you no longer need before throwing them out. This prevents sensitive information from falling into the wrong hands. Be careful about who you share your account information with, whether over the phone, online, or in person. Only provide your details to trusted entities. If you notice any unauthorized changes to your account, contact your financial institution immediately. The sooner you report suspicious activity, the quicker you can stop potential fraud from escalating. Additionally, avoid carrying your Social Security card or documents containing your bank information in your wallet or purse. Keeping these at home in a safe place minimizes the risk of being stolen or lost. Regularly check your financial statements and review your credit reports for unauthorized address changes or suspicious activity. One more important step is to sign up for fraud alert services. A fraud alert is a notice placed on your credit report that warns creditors to take extra steps to verify your identity before granting credit in your name. Some financial institutions offer these services for free, providing an additional layer of protection. And lastly, never share your passwords or PINs with anyone, not even close family or friends. Ensure your passwords and PINs are strong and difficult to guess. Avoid easily accessible personal details like birthdays or common words. By following these simple yet effective strategies, you can significantly reduce your risk of becoming a victim of identity theft or financial fraud. These tips can be found on page 4 of your Learner's Workbook. Now, even when you're careful about protecting your personal and financial information, it's still possible to fall victim to financial fraud. If it happens, these are crucial steps you can take to minimize the damage and protect yourself moving forward. The first step is to contact your bank right away and to freeze any affected accounts. This will prevent further unauthorized access to your funds. 2, review your credit report to see if there are any additional unauthorized activities that you need to address. 3, it's also important to report the fraud to the FTC, the Federal Trade Commission. The FTC can provide guidance on next steps and assist in the recovery process. And 4, finally, if necessary, file a police report. This is especially important if fraud involves significant amounts of money or if it's required by your bank or insurance company. Filing a report officially documents the incident, which can be essential for any investigations or claims.
Quick question. Are we supposed to be seeing different slides?
Yes, are you not seeing different slides?
We are not seeing different slides. We're still on the very
no.
front one or first one.
Thank you for pointing that out.
And I had a question too, Monique. Will the
Sure.
questions in the chat be addressed at the end of the session? Is that how it's being handled?
Who's monitoring the questions? Is it Roberto or you?
Yeah.
No, Roberto.
Roberto, okay, I didn't think so. Roberto, if there are any questions that you feel are relevant to what we're discussing at the time, can you just interrupt me?
Yeah,
I
of
want to
course.
get us caught up on the slides. Okay, so you're
Okay.
seeing the slide with my picture right now?
It says SAFE, Strategies to Achieve Financial Empowerment.
So your opening slide, I'm guessing.
Yeah, it's the same one. There, it's now okay. Now it says our sponsors. It's flipping through now. Good. Oh, I saw a question about the workbook. I'll send you all a link right now. Okay.
Okay, so you're seeing understanding financial thought, the
And
dumbs for guidance,
correct, yeah.
scanning, vision. Okay,
Protecting against loss.
okay.
Thank you.
All right, so I'm gonna do a poll here. And you'll probably have to come off mute to tell me what you think. Which type of insurance coverage do you think is most essential for a typical adult to have? Do you think it's health insurance, auto insurance, or homeowners or renters insurance? You can show me hands if that's easier. Health insurance? How many say health insurance? Okay, we've got a couple of hands there. What about auto insurance? Okay. And who believes homeowners or renters insurance?
I believe that, Linnell. Homeowners and renters.
I'm sure all the real estate people are going to say homeowners insurance. The correct answer, of course, depends upon your personal circumstances, but generally speaking, health insurance is considered essential. And that's due to its broad impact on everything. Without good health and good health care, those other things may not be possible. Owning a home, having a place to live, having a vehicle, those mean nothing if your health is not being addressed. Okay, now let's go to the next slide. So let's talk about insurance. And you're seeing the slide that says understanding insurance. Roberto, are we good? Okay, thanks, Lona, for the thumbs up. Okay,
Sorry, I was on
so
mute.
insurance is a financial tool that helps protect you from potential financial losses. And I know people don't think of it that way. They just think of it as a bill, but it is actually something that protects you from financial losses. By paying regular premiums, you get coverage that assists with the costs of accidents, health issues, property damage, and other risks. The main benefit of insurance is that it provides financial security and peace of mind, helping you avoid significant financial hardship and manage unexpected events more easily. We all know how expensive health insurance is. For example, imagine if you don't have health insurance and you have to pay for some of those doctor's visits and those procedures. The same is true for all other types of insurances. Car insurance, if you have an accident and you don't have car insurance, can you afford to pay for that repair out of pocket? Home insurance, if a tree falls on your roof, can you afford to pay for that repair out of pocket? Sometimes that can be over $100,000. So let's talk a little bit about the factors or the key terms that come into play with insurance. First is premium. Premium is the amount of money you pay to an insurance company for your coverage. Typically, it's on a monthly or annual basis. Secondly, deductible. The deductible is the amount you pay out of pocket before insurance starts covering claims. So, for example, on car insurance, if you have a $500 deductible, that means any damage that occurs to your car that's below $500, you pay out of pocket. Anything above $500, the insurance companies pays at $501, and anything above that. Co-payment or co-pay. This is a fixed amount you pay for a covered service at the time of service, such as a doctor's visit or prescription. Coverage. This is the protection provided by an insurance company or, excuse me, an insurance policy, including what risks for damages are covered and any limits on that coverage. So what that might mean is if you have home insurance and you have $1 million of dwelling protection, that means the damage to your house is covered up to $1 million. Claim. A claim is a request made to an insurance company for payment or coverage for a loss or a service that's covered by your policy. So you have a car accident. What do? You call and you report it. That's filing a claim. Out-of-pocket maximums. This is the highest amount you'll pay for a covered expense during a policy period. So once that amount is reached, the insurer pays 100% of covered expenses. And we usually see that with health insurance. So here's an example. We'll say Sarah's auto accident. Sarah had a minor car accident where her vehicle was damaged, and she also incurred some medical expenses. Here's how various insurance terms come into play. So premiums. Sarah pays a monthly premium of $100 for her auto insurance. This regular payment keeps her insurance policy active and ensures that she has coverage in case of an accident. Deductible. After the accident, Sarah discovers that her auto insurance policy has a $500 deductible. This means that she must pay the first $500 of the repair out of pocket before insurance begins to cover the remaining expenses. Copay. Sarah also needs to see her doctor for injuries sustained in the accident. Her health insurance requires a $25 copay for each doctor's visit. This is a fixed amount that she pays directly to the healthcare provider at the time of service. Coverage. Sarah reviews her auto insurance coverage and finds that it includes protection for collision damage, which will cover repairs to her vehicle after the accident. However, she learns that her policy does not cover rental car expenses while her car is being repaired, nor does it include coverage for roadside assistance, which, as a side note, I'll say is a real bad mistake on the part of her agent. They should have made sure she had that. Claim. To get her car repaired, Sarah files a claim with her auto insurance company. She submits details about the accident, including repair estimates and photos of the damage, and the insurance company processes her claim and pays for the repairs minus the deductible. She pays that deductible directly to the shop that repairs her car. And the out-of-pocket maximum, although Sarah's auto insurance doesn't have an out-of-pocket maximum, her health insurance does. If her medical expenses from the accident reach $5,000 in a policy year, her health insurance will cover 100% of additional covered expenses after she has reached this amount. Common types of insurance include auto insurance, homeowners insurance, renters insurance, health insurance, life insurance, and disability insurance. And you're seeing that.
I have a question.
Sure.
Monique, this is Linnell. That was very good intel. Someone who just had a car, my car was totaled January 15th.
Oh.
And that is very interesting intel that once you exceed your $5,000 medical, that your health insurance will kick in. That's really good to know. My question is,
can I jump in real quick?
Yes, yes.
It depends on your policy. You may not have a $5,000 deductible on your health insurance. You might just have $1,000 deductible. And with Kaiser, I'm not even sure that there is a maximum that you have to reach.
Oh, okay.
I'm a Blue Cross girl, so I don't know.
Oh, I see. I see.
But these are just illustrations for people to be aware of, because of course, once you do this during open enrollment and then you forget about it, and then an accident happens, and that's when it all comes back, right?
So that's when you set that up during open enrollment.
For health insurance, you set that up during open enrollment. With auto, home, renters, those insurances, those are declared to you on what's called your declaration, your policy declaration, which you get each time your policy renews. So if you have a policy that renews every 6 months, you'll get a new declaration every 6 months. If your policy renews annually, of course, you'll get it annually. But you can make changes to your auto, your home, and your renter's insurance anytime. You do not need to wait until open enrollment. You can call your agent and say, hey, I have a $1,000 deductible on my car. I'm a little bit concerned that that might be difficult for me to meet if I have a car accident. So I'd like to reduce that to $500. Other questions, Linnell?
No, that was great. Thank you.
Okay, alrighty. Okay, automobile insurance. So auto insurance is the type of insurance that helps cover the costs associated with damage or injuries from car accidents. So yes, it can also cover injuries. You can include bodily injury and additional medical care for car accidents on your auto insurance policy. You may not even need to use your health insurance. Generally speaking, auto insurance provides financial protection by paying for repairs to your vehicle, your medical expenses, and other related costs, such as a rental car. There are different types of coverage, including those that are required by law, and additional options that you can choose based upon your needs. In most states and counties, having auto insurance is mandatory for driving legally. This requirement ensures the drivers can cover costs related to accidents or damages that they cause. Without insurance, you're facing legal penalties, fines, and even having your license suspended. And I'll add, you could even get sued if you damage somebody and you don't have insurance to take care of the damages that you caused. Minimum coverage requirements. Now, each jurisdiction sets its own limits or its own coverage requirements, but they typically include bodily injury liability, also referred to as BIL. This covers injuries or death that you cause to others in an accident. Then there's property damage liability, PDL. This covers damage to other people's property, such as vehicles or buildings, fences, anything that you might hit with your vehicle. Ensure you meet or exceed your state's minimum liability limits. Check your state-specific requirements through your Department of Motor Vehicles website, or you can also go to if you're in California, the CDI, California Department of Insurance website, and of course, your insurance agent. Now, there are also optional coverages. While some coverage is mandatory, there are additional protections that you can add to your policy. Collision coverage is one of them. This covers damage to your own vehicle from a collision, regardless of fault. So that means whether you hit someone else or someone else hits you, collision coverage will take care of the damage to your vehicle. Comprehensive coverage protects against non-collision related damage, such as theft, vandalism, or natural disasters like, say, a tree branch falling on your car. There's also uninsured and underinsured motorist coverage. This provides protection if you're in an accident with a driver who has inadequate or no insurance. And I will tell you that there are a lot of people driving without insurance these days because of the economy. A lot of people are driving without insurance. Normally, it's about 15%. It's much higher than that at this point. So just think that 15 or more, 15 plus people out of every 100 that you're driving past on a freeway does not have insurance. So you really want to make sure you have proper protection. You want to make sure you have uninsured motorist protection on your insurance policy. Medical payments coverage helps cover medical expenses for you and your passengers, regardless of who's at fault. Gap insurance. This is not offered by every company, but it is something that's available to take care of the difference between what you owe on your car and the amount that the insurance company will pay for the car. Because of course, the insurance company is going to depreciate your car based upon how much you've driven it and other wear and tear, but the finance company still wants the amount that they lent to you. Rental car coverage. This provides coverage for rental car expenses if your vehicle is in the shop due to a covered claim. And then there's roadside assistance, again, which is optional, but most carriers do offer this as well. It helps you with emergencies like flat tires, dead batteries, or towing. Okay, so now let's talk about homeowners and renters insurance. When it comes to protecting your living space and belongings, understanding the difference between homeowners insurance and renters insurance is crucial. Both types of insurance provide valuable coverage, but they serve different needs based on whether you own or rent the home. I will add that a lot of times renters don't get insurance because it's not always required. Landlords don't always make it a condition of a lease, but I really want to encourage you, if you are renting and you don't have renters insurance, which by the way, it's at the point now where about 45% of adults under 40 are renting. The median age for homeowners has gone up. A lot of people are renting until they're in their early 40s now. It's not like back in the day for a lot of us when we bought a home in our late 20s or early 30s. People are renting much longer now, and that means you have a lot of things in your home. You have furniture, you have electronics, clothing, dishes, linens. If you were to have a fire, or if there were water damage caused in your home and you had to replace everything and you didn't have renter's insurance, you would be paying for all of those items all over again, rather than paying $200 or $300 per year for renter's insurance. So it's really worthwhile to go ahead and purchase it, and you'll usually get a bundle discount with your auto insurance when you also purchase renter's insurance. Let's talk about homeowners insurance quickly though. Homeowners insurance is designed for property owners and offers comprehensive protection that includes not only your personal belongings, but also the structure and the house itself. This type of insurance covers various risks such as fire, theft, natural disasters, and often includes additional benefits like liability coverage and protection for living expenses if your home becomes uninhabitable. Homeowners insurance typically ranges, according to this slide, from $800 to $2,000 a year, but this clearly is not talking about the Oakland Hills. Homeowners insurance in California right now can be rather expensive. And we won't get into details because every home is different, but you know, homeowners insurance in our beautiful state of California is a little bit on the expensive side right now. Now, on the other hand, renters insurance is tailored for those who lease their living space. While it doesn't cover the structure of the rental property, it provides essential protection for your personal possessions and liability. Renters insurance is generally more affordable and focuses on safeguarding your belongings against common risks such as theft or damage, and also offers coverage for temporary living expenses if needed. Your landlord is not required to provide replacement housing for you, but if you have renters insurance, your renter's policy will take care of that. Think of it this way. If there's a fire in your apartment or the house that you're renting tonight, and tomorrow you have to go shopping for a new place to live, and you need first and last month's rent and a security deposit, would you have that? If the answer is no, and even if it's yes, renters insurance can take care of that expense for you.
Monique, I just want to add, this is Linnell Bevels again.
Sure.
Because I've been in the mortgage space for such a long time, I have some interesting stories, but one about a renter's insurance individual who lived in a beautiful, $1 million+ home, leasing, and had a fire in the home. And it was mostly smoke damage. It was some plastic from the baby's food chair or whatever that got left on the stove. So it was a lot of smoke damage. But of course, smoke damage has chemicals. And so everything in the place had to be replace. And these are folks, high income earning people. And so for them, I guess maybe not such a big hardship, but a hardship nonetheless, and a tough lesson, a very, very tough lesson that you should always have renter's insurance, no matter what your economic circumstances are. You should always have it.
Absolutely. Well, if nothing else, it's for the scenario that I mentioned earlier, which is having to move. I don't know how many people who are on the call today live in Oakland, but one of the stories I tell that I still remember it so well. A couple lived by the lake and by Lake Merritt, and they had pets. I think two cats and a dog. And it was a fourplex. And in the middle of the night, literally the ceiling collapsed on them in the bed, and the unit was on fire. They learned later that the young people who had the apartment above them were cooking meth. And they thought the guys were just making t-shirts. No, they had a drug lab. They had no idea. But these people suddenly, with their pets, had no place to live. And the insurance took care of putting them in a hotel with their pets that evening. They got Target gift cards to go buy clothes the next day. And then we were able to write a check to them so that they could go and find another apartment. And nothing was more gratifying in that moment than to be able to take care of them. They were, as you can imagine, completely shocked and devastated, and just glad to be alive. But having the safety net of their renter's insurance made all the difference. They were able to go out and get a new apartment within the next couple of weeks after that.
Wow.
Yeah. Okay, health insurance. It is a legal agreement between you and the insurance company that details how they will pay for your medical expenses. And it includes coverage for preventive care, which includes services like routine checkups, vaccinations, and screenings that will help prevent illness or detect health issues early. Previously, under the Affordable Care Act, health insurance was federally mandated, meaning most individuals were required to have coverage or face a penalty. However, as of January 2019, the federal mandate was eliminated, though some states have their own individual mandates. To determine if health insurance is required by law in your state, check with your state's Department of Insurance or Healthcare Marketplace. States like California, Massachusetts, and New Jersey have their own individual mandates. People typically get health insurance through several common sources. One is employer-sponsored plans. Many people receive health insurance through their employer, who offers a group plan as part of their benefits package. Government programs like Medicare for those who are 65 and older or with certain disabilities, Medicaid for low-income individuals and families, those provide health insurance to eligible individuals. Then there's the health insurance marketplace, where individuals can purchase health insurance plans through government-run marketplaces like healthcare.gov or state-specific exchanges, especially if they don't have coverage through work or qualify for government programs. There are private insurance companies. People can buy health insurance directly from private insurance companies if they prefer not to use the marketplace or if they're looking for specific types of coverage. Spouse or family plans. Some people may be covered under a spouse's or family member's health insurance plan. And COBRA. Individuals who lose their employer-sponsored insurance may be able to continue their coverage through COBRA, the Consolidated Omnibus Budget Reconciliation Act, for a limited period. And anybody who's ever been on COBRA or seen a COBRA notice, it's very expensive. It's very, very, very expensive. All right. And of course, life insurance. Life insurance is a financial product that provides a lump sum payment to beneficiaries upon the policyholder's death. Regular premiums are paid to the insurance company, and in return, financial support is given to those named as beneficiaries. Beneficiaries can include individuals such as family members or friends, or entities like charities or trusts. This support can help cover major expenses and offer financial protection. Whether life insurance is needed depends on one's personal and financial situation. I do want to provide a bit of additional information on this because life insurance can be used even when someone is still alive. There are, it's actually rather common now to purchase life insurance that has an accelerated death benefit, is what it's called. And so that means that if you have a fatal illness, let's say you've been diagnosed with cancer and the expectation is that you probably will not live much longer. Maybe you have a year left to live. The insurance will actually advance some of the death benefit to your family early. And in the rare occasion when you actually do live, the life insurance can continue. It will just be reduced by that amount of benefit that you've received. But life insurance can be very important to a family, even in those final stages. It can provide family with the relief and the support that they need financially just to get through those last few months, those last 6 months. Also, a lot of people say they can't afford life insurance. People who say they can't afford life insurance are the people who need it the most. Because think of it this way. If you have a family and you're saying we just can't squeeze anything else out of our budget, what would happen to your family if they lost your income? You can't afford not to have life insurance. And there are so many different types of life insurance now. I mean, you can even get life insurance for about $10 a month. And I'm not talking about the stuff you see on TV. There are actual good life insurance policies that are very, very affordable. And even with health issues, you can still get life insurance. All right, we'll go to our next slide. Disability insurance. So this is a type of insurance designed to provide financial support if you become unable to work due to a disability. It replaces a portion of your income, helping you maintain financial stability while you're unable to perform your job duties. Short-term disability insurance provides coverage for a portion of your income for a limited period, typically a few months, and is often used for temporary conditions such as pregnancy-related leave or short-term illness. The coverage period and percentage of income replaced can vary. Some employers offer short-term disability coverage as part of their employee benefits package. Now, long-term disability insurance covers a portion of your income for an extended period, potentially until you reach retirement age if you become permanently disabled. This insurance is crucial for providing ongoing financial support if you're unable to return to work for an extended period. The benefits can continue indefinitely depending upon the policy terms. Individuals can get disability insurance through several sources: employer-provided insurance, individual policies, and government programs. Things to consider when choosing disability coverage. One is the waiting period or elimination period. This is the amount of time you must wait after becoming disabled before insurance begins. Also, income replacement percentage. This is the percentage of your income that the insurance policy will replace while you're disabled. Opting for a lower income replacement percentage can also help you reduce your premium costs. For instance, if your policy covers 50% of your income instead of 70% of your income, your premium will likely be lower. Does that make sense? All right, so we're finishing up here. So next steps. So today we explored various methods to protect your identity, to protect against identity theft, and we reviewed different types of insurance. To make the most of what you've learned today and get closer to your financial goals, let's talk about what to do next. One is analyze. Start by checking your existing strategies for fraud prevention and insurance coverage. Use your learner's workbook to assess whether your current measures are sufficient and identify any gaps. Get SMART goals. Reflect on recent changes in your life that could impact your financial protection needs, such as new accounts, changes in personal information, family status, health, or significant purchases. Set specific, measurable, attainable, relevant, and time-bound SMART goals to address these new risks and to improve your protection measures. Take action. Use your workbook to help you adjust your protection strategies. This might include setting up fraud alerts, updating your security practices, or adjusting your insurance coverage to align with your current situation. Review and adjust. Regularly review and make adjustments to your fraud prevention and insurance policies as needed to keep up with changes in your life and any emerging risks. And continue learning. Stay informed about best practices in fraud prevention and insurance coverage by seeking out reputable resources, workshops, and online courses. All right, well, Financial Beginnings would like to gather your feedback about your experience in this lesson. So using the QR code there, this survey includes questions to determine your knowledge and confidence before and after this Financial Beginnings session, along with the effectiveness of your presenter. To take the survey, you can scan the QR code or use the web address that you see there. Your input will help Financial Beginnings understand our learners and how the content and delivery can be improved. Feedback will also support the organization in researching the impact of their program and marketing efforts. Responses to the survey are confidential. Financial Beginnings may use quotes from surveys and marketing materials, but will not include any identifiable information such as your name. Your feedback is important to the improvement efforts of the program, so feel free to be open and honest. This survey should take approximately 5 minutes to complete. Thank you in advance for providing your feedback.
Great job, Monique.
Thank you. Are there any questions?
I didn't see any in the chat throughout, Linnell, Monique, sorry. But we do have a few more minutes before we end, so if there's any last minute questions, y'all, now's the time.
Great presentation, Monique. Thank you.
Of course. Nice to see you always. I'm just curious as to how many people are in California. I see hands. I know a couple of names here. Eloise, Karen, Linnell, of course. Everyone else is from outside of California. Okay, that's great.
Mm-hmm. I see in Oregon.
Oregon, okay. Another Oregonian. Awesome. Well, it's been my pleasure. I guess I will just.
Oh,
So I do have a question.
Sure. Oh, sure, please go ahead.
And I don't know if this is really covered in what we were talking about today, but it came to my mind, so it might come to others. And that is, what would you recommend is the best way to shop for insurance?
So first, let me ask if you are a veteran or if you're an educator.
I am neither.
Okay. The reason I asked that question is because there are a couple of insurance companies that cater to those two groups, and they're actually fantastic companies. So for anybody who is curious, for veterans, USAA, and for educators, at least in California, it's California Casualty. I'm sure there are other insurance companies that cater to teachers, but usually they have very good pricing, and other companies just can't compare. I would say the next thing is a lot of people go online. When you do that, when you go online, your information is going to be sold. And a lot of insurance companies are going to be calling you. So you might ask friends. You might ask your friends, who's your insurance company? How do you like them? because they'll be honest with you. They'll give you honest feedback about how they perceive the pricing and what they perceive the service to be like as well. Um, as somebody who's running an agency, I actually do buy data from the internet, but transparency, I think talking to friends and family would really is an effective way to learn about who to go to.
Awesome. Okay, perfect. I just know that I've just kind of stumbled into insurance all of my life, instead of being intentional. I did want to comment. My husband is a veteran, and we looked into the USAA, and it was more expensive
Was it?
than, yeah.
Oh, oh,
So I
wow.
was surprised by that. However, some insurance companies do give a veterans benefit,
They do.
discount
They
as
do.
well.
And I would definitely ask for that. Yeah. USA, I'm surprised to hear that, but no, actually, I have been hearing something. So,
Yeah.
but I always tell people to try to get their discounts or whatever is connected to their employment, if at all possible, because it's usually pretty good.
Yeah. Okay. Thank you.
Sure.
Monique, would you, if you feel comfortable, in case anyone's interested to inquire with you about those types of services, would you like, would it be okay to share your information?
Sure,
Yeah,
sure. Did you
awesome.
want me to put it in the chat or?
Yeah, that'd be great. Yeah.
Sure. Any other questions? So I serve the entire state of California, not just Oakland. I'll print them
Nice.
out.
Nice,
One
and
of my
thank you so much for
information.
your transparency and honesty with all that information.
Of
Great.
course, of course. So my information is there in the chat.
Awesome.
Well, it's been my pleasure. Thank you so much for the opportunity.
Mhm.
Everybody have a great day, wonderful week.
You too.
Awesome.
Thanks again.
Thank
All
you so
right.
much, Monique. Yeah, thank
Okay.
you all for joining.
Take care.
All right.